Let's go global now. And speaking of Kara's homeland, UK monthly GDP growth figures are out tomorrow afternoon, which could make some interesting reading for a British pound, which has struggled of late. Pete McGuire from XM joins us to preview that and plenty more. Pete, good to go and see you. Plan B as well in the UK as well. So no more restrictions being put in place. How does that go and impact cable?
Well, good morning, David. Good morning, Kara. It'll have an impact, and it will certainly create more volatility for traders. So I think everyone, in some ways, if you're a trader, it will be quite exciting to probably make a nice dollar out of, because I think that those big whipsaws could come into play, and probably over what we've seen in the last couple of trading sessions and moving forward will be a little bit more excitement to the cable and possibly to a number of the other big currencies.
So GDP figures in focus as well for the UK. What are you expecting? Is it on the Bank of England's watch list, do you think?
Well, it certainly is, Kara. The numbers are a little bit softer what we've seen in the last 3 to 6 months. It's certainly tailed off as far as growth, and that continued growth is it is lagging, and it's not a good sign as far as the rebound, and nothing like what we saw earlier in the year. So there's the first part of it. The inflation story is galloping away also across the UK, like many other major markets, and we're feeling it as well here. So there's the story. How that goes as far as retail sales leading into Christmas, I'm not expecting any great numbers to be released, and it's going to be a tough, I think, couple of months over that Northern Hemisphere winter.
Since the Ashes are on, I'm also going to ask you about the Aussie dollar as well. We're talking cable, let's go talk about the Aussie dollar. How is that looking at the moment? Because from a risk-reward setup, it looks pretty constructive at the moment after we saw that test just below 70 cents.
Absolutely. David, on Monday morning, we were at 69. I remember Andrew saying with Kara 69.98, I think. So that was about the low, and we've bounced all the way to 71.65 in that 3-day window. So that demonstrates the volatility out there. It really moved very quickly over that 24 to 36 hour window. It's been very range bound in the last 24 hours. But yeah, there's no shortage as far as news coming through from the inflation numbers in the US, GDP numbers, global themes really impacting that whole storyline. So I'm not expecting any true, I think, momentum to the upside for the Aussie in the next couple of sessions. I think where we're sitting is probably fair value at the moment.
Pete, how are the gold traders faring at the moment? It's kind of hovering around some key technical levels. Outlook over the run into Christmas?
Well, we can't break through 1800. It's been a whipsaw of a trade, Kara, over the last 6 to 8 weeks. It's been electric, and some of those moves have been nothing short of dramatic, washouts of 60, 80 bucks in trading sessions. So the traders that are watching it and trading it and using all of their technicals have done very, very well out of it. It's range bound at the moment. There's no great, nothing really there to show us, is it going to push back through 1800? Sitting there at about 1785. We've got the US dollar index 96.1 to say 95.9. It's very tightly traded. So I'm not expecting anything. The inflation numbers could spook them a little bit. So you might see gold have a little bit of a rally to the upside through fear. And that leads us into the taper talks and what happens as far as interest rates going into next year for the US.
Even by its usual standards, crude futures have been absolutely whippy over the last month or so. I read this morning that people are starting to talk about $100 per barrel oil again. Is that realistic?
Well, it might be, David. I hope it's not, because that inflation concern is going to be dramatic across the globe. What we've seen in the last 3 weeks have been extraordinary. We're at 85 down to just under 70. We've got Brent now sitting at 76. We've got WTI at 72.25. So it's been really big, dramatic moves. Do we see 100? I hope not. I think you're going to have trouble. Maybe, the early 80s will be a handbrake before Christmas. It's got to do a lot of moving to get up to, that 81, 82 over the next couple of weeks. So there's the uncertainty factor. Do we hit 100? I think the only way you do that would be massive issues as far as the production. So, name the problem, or a geopolitical concern in the Middle East. But I think everything seems to be fairly well under control. I'm still keeping an eye on Russia and Ukraine. So, yeah, that's really the only theme I can see of blowing things out of the water.
Pete, let's talk US equity markets because there still are a lot of risks on the table, COVID and Omicron being one of them. Heading into the end of the year, is volatility going to be the theme?
Well, I tell you what, Nasdaq has proven one thing. What we saw as far as that non-farm payroll on Friday night was very, very soft. And analysts were saying 550, you hit about 211. So what we've seen in the last 2 days, as far as Nasdaq, has been a 4% rise, just under those two trading sessions. So it's certainly shrugged off any concerns as far as Omicron. There's the first part. The second part is momentum building over the next for a Santa Claus rally. I wouldn't be surprised to see further uptick from here. So the overall situation is relatively okay in the States. They've got major issues as far as job openings and worker shortage. So they haven't got enough workers. And then you've got the inflation story running at 7%. Where are we by February? That'd be a real, if we're at 8% by February or 8.5%, then that'll be dramatic, and what impact that's going to have as far as rate increases in the first or second quarter of 22 would be a great concern to any trader and certainly to the equity markets, Kara.
On December 9th, it takes a lot to get me pumped up, but I've got to say that inflation report in the US on Friday night is going to get me pumped. How important is it when it comes to the Fed meeting next week?
Very important, David, and if it's 40-year high, 4 decades. And one thing that you should be conscious of, but be a little bit before your time, but I can remember it, that when the bunker hunts cornered the silver market, it went to $52 an ounce in 80 and gold shot through the roof. But the concern then was that you had inflation. If you were using the same metrics as what you used at that time, inflation would be running now at about 14%, 15% in the States. So they've changed the rule book, and we're now running at 7%. So that demonstrates the fragility as far as the global economy with inflation. So yeah, I think inflation is a major concern, and we're feeling it here. So everyone's got their hand out for a Christmas, not only a rally, but a Christmas pay rise, and it's got to be significant to match what we're experiencing in inflation, David.